I want to share the latest results for the portfolio calculator. 200K is one of our top portfolios. We'll go over all of them. We are looking at the 200K portfolio right now. It's in a $12,360 drawdown. Worst case drawdown is $16,982. We updated this on Monday, taking one strategy or two strategies out and adding one strategy in. So this combination is down 58.1750. And for this week, it is down 45.4250. So those are the results. And how is it, you ask, how is it in a $12,000 drawdown, but only down 58.1750 on the month? And the way to answer that is to see that the drawdown started on the 27th. The last equity peak was on 7/26. And if you sum up all these daily P&Ls, you can highlight them in Excel. You'll see 12,360 down there is the drawdown. So 12,360 is this drawdown. The sum of the daily P&Ls since the most recent equity peak on July the 26th is 12,360. And then you see the drawdown going into the end of the month we were at 65.4250. And then in August, the drawdown is the monthly loss of 58.1750, which you see right there. Now, we did transition this on the 16th, so how does that play out? How do you calculate the differences here? You go to the 200K portfolio, July 1 through August 13th. That's our last one. Again, we removed stock index swing and NQ breakout and added SR counter trend 2V21M. It is down 91.2750 on the month. So in reality, if you're trading this portfolio, you are trading it, these daily P&Ls, minus 34.55 on the first 13 days of the month. You're at minus 34.55. And then you are trading this set of strategies right here, the latest portfolio this week. So minus 34.55 plus this. So you get right at minus 8,000, minus 79.99 approximately on the month. So the hypothetical performance that you should compare your real results to are right at minus $8,000 on the 200K portfolio if you're implementing it correctly. So it's important that you make sure you implement these correctly, that you have automation set up, that you have a VPS, and I recommend New York. And 50K portfolio, one of our other top portfolios, we have not changed this. We've lost a lot on gap continuation and reverse. You know, down 18.9250 on the month. So it's been what feels like a terrible month because we had such a nice winning streak in a lot of these portfolios that in reality you have to put it in perspective. You're only down 18.9250 on the month per unit in this portfolio. And the drawdown also started in July. So the last equity peak was on 7/27. So actually the last equity peak was on the 15th of August. So you're at equity peak on the 15th of August. You had an equity peak here. You had a drawdown and then a brand new equity peak just a week ago. Last Thursday was an equity peak. Right here, last Thursday was an equity peak. Last Friday was no trades. Saturday, Sunday, no trades. And then this week, it was down. First 4 days of the week, just losses every day. And then Friday, there was a little bit of a comeback. And so you're down this week, 46.35, but you're down on the month, 18.9250. So you were up on the month until you got to this losing streak. You were up 27.4250, and then you lost 46.35 this week. And this is the DV column. I've highlighted these there, daily P&L. And you can go back, you can select the portfolio you're interested in and find the daily P&L for any date range you want. And column A is the date range, the daily P&L right next to the drawdown. And so just look at these numbers closely and you'll understand them. And let's go over the rest of the portfolios. All Strategy Access 78. It recently made a brand new largest winning day. Sometimes when that happens, it feels like the market starts to chop and says, hey, give us our money back. And I've seen that before where you have a really good winning streak and then the market tries to break up what you took, and so it had a worst case drawdown following that, and it's right as of Friday. Friday was up 10K after being down every day this week, down 22,000, and then up 10K on Friday. This is a volatile portfolio, larger account, 500,000, even $1 million to trade this portfolio. It's 78 trading systems, so it's a lot, and so you have to anticipate larger drawdowns in the future with higher index values. We see that here in this range right here. You had a larger drawdown during the pandemic, during Q4 last year, and then now we have this, and because it's an aggressive setup when we're at higher index values than we've ever been before. So you have to take that in perspective. You have to take a look at the whole year, almost 200K on the year after this was released in November. Actually, the base version of this was released in November, and then in July we made one change to the AT 2020. So very small and significant change in July. And then, we released the previous portfolio, had a bad December, slow start to the year with not much profit in January, a losing February, and then a nice winning streak from March through July. And then now the market is chopping, trying to, in essence, it feels like the market at times knows you and wants to get its money back. And so we've had this endless chop in August. And, we've seen that before in some of the other portfolios that are more conservative, and this one's more aggressive at higher index values. All Strategy Access short list is a more conservative version, and it is up 83K on the year, down 67.45 on the month. Not too bad for a losing month. $12,000 drawdown out of 16,821, and we have the All Strategy Access 51 plus 7. It was down. It's down 18,805 in a drawdown, down 14,000 on the month, up 123 on the year. And this one was last released in December, and so you can see the results going through December and then throughout this year. Good results. Stock index portfolio 27. And now I'm not a fan of just trading stock indexes anymore. I used to just trade stock indexes. And I know that I tend to have more strategy with stock indexes because there's more data, more ideas, more history. But I'm not a fan of just trading stock indexes. So I prefer to trade a diverse group of portfolios. I may remove this one going forward because I don't recommend trading just stock indexes. You can always do that with All Strategy Access. If you have All Strategy Access, just trading the stock indexes if you want to. But sometimes the stock indexes are just not as tradable, and you lose your diversity in a month like this when you have other strategies that are potentially doing better in the commodities markets. We've had a good month or good week in soybeans. I have to tally all the results for the commodities, and we've gone over the 200K, 50K, the micro portfolio aggressive. Again, this is kind of like the All Strategy 78 for the micros. Down month, minus 2,500, 9,400 on the year. It's kind of in line with some of these other years so far. Volatility has been shrinking, and as far as the VIX is concerned, but then you just get a lot of chop in that range, not a lot of directional trends. But it has been here before, and it was here in Q4. Last Q4 was very choppy. It's been very choppy. This from the end of July, it just seems almost every day just chops. And so, a conservative version, micro portfolio conservative. This is the 200K portfolio strategies for the ES, NQ, gold, and crude oil. It is down 630.50 on the month. This is a really good way to start trading and learning multi-strategy automation. It includes 33 strategies, and you can see futures trading is inherently risky because you're using leverage. You don't have to use leverage. You could fund your account with enough money that you would cover the actual value of all the contracts traded. But if you put the minimum amount in there, you are using leverage. And if you're going to use leverage and you're going to learn, you're going to do multi-strategy automation, you might as well learn on a micro portfolio. Regardless of your account size, you can make big mistakes if you don't know what you're doing. And so you want to learn on the micros. If you have a small account, micros are a good place to trade. So this is a conservative setup. You can typically live with these kind of P&Ls when you're not going to make a lot trading one micro. and you're going to lose less trading on micro than you would if you're learning on mini. So that's the updated portfolio calculator through August the 20th, 2021.